Okay, welcome to the Wall Street crossover show, sponsored by Admiral Markets and with their senior market commentator, Darren Sinden. Are you a senior market commentator or just a market commentator?
Certainly senior in years, Zach.
Okay, so, well, and obviously an eminence and prestige.
Oh, thank you very much, too.
Right. Just before we came on, you were discussing, I think, the German finance minister's comments regarding the latest twist in the Greek tragedy.
Yeah, Mr. Schäuble seems to have poo-pooed the Greek parliamentary vote and has said apparently that an exit for Greece would still be the best medicine. So it would be interesting to see how the proposed plan fares in the German legislature when it's voted on. So which I think is Friday. So
yes, but I think we've learned from this saga that the votes are irrelevant as long as they only come up with one. Well, they have to come up with one conclusion.
Yes, and there is a chance of qualified majority voting as well in the total vote amongst the 6 nations that are going to put it to their individual parliaments. I suspect it will go through, but there'll probably be quite a bit of mewling and kicking and screaming before it's actually done and dusted. Right,
well, that sounds really healthy. In the meantime, the markets are up, or the German market's up actually, but we'll go on to that a bit later.
Yes.
Data released over the European session.
Okay, well, the latest in the sort of seemingly never-endless round of Eurozone inflation figures. This is CPI for the Eurozone as a whole, year-on-year number we look at here, and this is June 15 versus June 14, so modest inflation here, 0.02% plus. That's what the reading was, plus 0.02% the forecast, and the prior read equally plus 0.2%. So yeah, flatlining but modest inflation in the Eurozone, if you believe that figure.
Yep.
Over the last 12 months. And then we had the trade balance numbers for May. These are not seasonally adjusted, so they're subject potentially to revision going forward. But the thing that struck my eye was that, yes, it was a surplus, 18.8 billion euros, but that was significantly lower than the prior read in April of 24.9 billion. So it's far from a smooth upward curve in terms of the retrenchment, shall we say, of the Eurozone economy. And I don't know what Mr. Trichet thinks of it, and what Mario Draghi will say this afternoon, but I should think current and former central bankers must be wondering where they've gone wrong. And then, speaking of where people have gone wrong, bridge financing for Greece gets provisional approval. 7 billion euros apparently has been nominated to tide them over. The only thing is, nobody seems to know where it's going to come from. So it's been agreed in principle, but as Mark Twain said, never let the truth stand in the way of a good story. But I'm sure they'll find it from somewhere.
Right.
And just before we came on air, the ECB interest rate decision. No surprise that rates weren't changed. Press conference at 13:30. So Mario Draghi and his colleagues will be up on the stage. I'm sure they'll be asked about the bridge financing. Not that it's necessarily anything to do directly with the ECB.
Is it bridge financing, or is it a bridge on top of another bridge?
Yeah, I mean, yeah, you can you can look at it in all sorts of ways. It's just pouring more good money after bad, basically.
Okay.
But there we are. So all eyes will be on Mario Draghi, as I say, in about 25 minutes' time.
Okay. Well, next up we have the European movers.
Yeah. Okay. So I picked on first of all Swatch Group, UHR in Switzerland. They announced numbers to date. Profits fell by 20%. Mostly on the strength of the Swiss franc. I don't think that was any surprise. All Swiss exporters are subject to those adverse currency movements. But what I think the market did take positively was the fact that sales rose 2.2%, even in that circumstances, to around 4.19 billion Swiss francs. And the management was very positive. You might have thought they'd be bemoaning their lot, but no, they say the outlook in all regions was very positive. And the stock is up 3.9%, has been a bit higher, trading around 401.6 Swiss francs. So it's not all doom and gloom for Swiss exporters,
amazing.
It seems. And then we moved to France and Orange, ticker ORA there in Paris, €15.26, up 2.31%, and this is a sort of proxy for the rest of the European telecom sector, which is very much in focus ahead of earnings. Positive notes out from both JP Morgan and Credit Suisse today, and as a sort of additional catalyst here in the UK, Ofcom's mooted the possibility of a breakup of BT into two separate divisions, so the actual network, the Openreach, would be one, and BT as a sort of provider of telephony and broadband services would be a separate division. So whether that goes ahead, we don't know, but it looks like there's a sort of freer approach to competition in the wind for telecoms markets.
Okay, well that's good news for the telecoms. M&A rumours and movers.
Okay, well not too much in the way of exciting stories after yesterday's biotech potential merger, but eBay. Nice simple ticker here for us, EBAY in the US. It's around $63.44, said to be close to selling off what they call its enterprise unit for around $900 million. Most likely to buy it is Permira, the private equity firm. The enterprise unit is basically a warehouse and logistics division. Interesting to know that eBay bought that back in 2011. Then it was called GSI Commerce. They paid $2.4 billion for it. So they're taking a massive whack inside 4 years on that business. It's not good news for eBay, but they've got bigger fish to fry because they're basically planning to split the business into, separating PayPal from the online marketplace division. What's also pertinent is that eBay report Q2 earnings today after the close. Just to give people a bit of context as to how the stock's been performing, they're up. Shares are up 13% year to date. Interesting also to contrast that to the performance of its much larger and much more publicised rival Alibaba, that floated earlier this year. They're actually now down 22% year to date. So quite interesting that although eBay is having a tough time, it's doing a bit better than the Chinese peers. Okay,
well that's also good news. And on the data points.
Yep, another fuller card, shall we say, today. So we've got weekly jobless claims. First up, forecasting 276,000 claims, so a slightly higher number than the prior 265k. But if we do see a lower number today, and particularly anything nearer to the prior read or below, then the hawks will be clamouring for a rate rise. They're very much watching this number as a guide to that. And then a guide to industrial production and what people are thinking about the economic future. Philly Fed survey coming out this afternoon. The forecast is of a read of 12 versus the prior read of 15. The June number was a surprise to the upside, so something around 12 will or a little bit better will keep people happy. A lower number might leave them scratching their heads. And for the second day in a row, we've got the Fed chair.
Thought we had enough after yesterday, but obviously not.
Back again on Capitol Hill. Yes, they do this twice a year. She gets the Fed chair gets 2 days to
Humphrey Hawkins.
That's what they call it. Yes, the Humphrey Hawkins testimony. So she's back on for a second day, and no doubt the markets will be pouring over every word again. Okay,
a little bit of volatility maybe. On the pre-market movers.
Okay, so a couple of names to look at here. First of all, On Deck Capital, that's ticker ONDK in the US, $13.80, up around 5.3% pre-market. It's an online B2B lender. It's an online lending marketplace in effect, but it's raised revenue guidance by 5% and pointed out that its online loan platform, the turnover there's gone up by 55% by dollar value in Q2. So the market really likes
on fire at the moment.
Yeah, we've looked at a couple of things, in this space, LendingTree and one or two others recently have come across our radar, and so it's a sector definitely to keep an eye on, as we were talking about before the show. Alternative payment methods.
Eating into the banks.
Exactly. Yeah.
Less than loved banks.
Indeed. And then another darling of the new economy, Netflix, ticker NFLX in the US, $110.10, up 12.2% pre-market, and simply on the basis that they reported last night, and they announced a new record number of global subscribers, 65 million plus now in terms of the people that have signed up to Netflix, and the income for the quarter was 25% above forecast. Still didn't make any money. Actually made a big.
But apart from that, a massive success story.
Yeah, I mean, it made a big loss basically, but set up on increased costs. But the thing is, people can see that the subscriber numbers are going, and that's of more relevance to the business at this stage. So the market feels.
Okay. On to the major indices,
Yep.
and still going from strength to strength.
Well, they are in Europe. FTSE's a bit more measured this morning. 6750. We've gone for it for the downside level here. Plays 6800, the round number there on the upside. The DAX sharply better. I think it's had 5 winning days in a row now. So perhaps we're due a bit of a correction. But for the minute, then 11,700 is the downside level to watch. Plays 11,770 on the upside.
I think people got that totally wrong.
Yeah.
That's fair to say? I mean, just as a general, I didn't hear anybody saying, oh, actually, I think this is a good buying opportunity with Greek uncertainty.
No, definitely
It hasn't
not.
really come on to that.
But I suspect it might be more a function of a weak euro again, rather than some compelling reasons to buy Germany per se. And then in terms of a weak euro, euro US dollar 108.60. Now that is a really key level. A break of that will probably send us, down very quickly. It's a key support from March of this year.
And that could happen, I suppose, around this 1:30 meeting.
Yeah, absolutely. Depending on what we hear from that, and then to the upside, we need to get back above 109.15 if we're to make any gains in that direction. And then Aussie dollar, US dollar, weaker again. 73.20, the level to watch there on the downside, and I wouldn't, bet against that giving way at some stage in the next few days. And 74.11 is the upside level to play. Dollar yen, after the Bank of Japan downgraded its own GDP and inflation forecast, having spent the last sort of 3 months talking a bullish story, yen weakens again. So 123.70.
Flip flop there.
Well, absolutely. We never believed that story. 123.70 on the downside, 124.17 the upside level, and again. I think we can see further yen weakness going forward. And in cable, 156.01 is our downside level, and 156.42 we want to watch to the upside. Again, just looking for a bit of a directional cue in that.
Okay, well that's the end of the show. I think we'll have to wait and see what the ECB press meeting comes up with. But in the meantime, Darren Sinden, market commentator at Admiral Markets, thanks for being with us today. We'll be back 1 p.m. tomorrow. Same thing again.